Welcome to the Roberts Law Office Injury Podcast. Kentucky attorney Jeff Roberts has over 25 years of experience. He'll provide answers to your questions related to personal injury and automobile accidents, workers' compensation claims, and Social Security disability benefits. Let's join Jeff for this episode. And friends, welcome back. We are down in Calloway County with attorney Jeff Roberts. And Jeff, today we are going to talk about multiple areas of insurance. Now, initially, for those who are listening, we're going to talk about car insurance, motorcycle insurance, which is stuff we've referred to in previous episodes. But if you're a homeowner, please hang on, because at the end of this episode, we're going to talk specifically to homeowners about specific types of insurance coverages. So you might want to stick around from that. From an attorney standpoint, how to make sure that you're covered should something happen there. Hey, Jeff, thanks for having me back down. Good to see you.
Good to see you, Jim.
So, in all these different episodes that we've done, we talk a lot about cars and motorcycles and trucking collisions. And really a lot of this, for better or for worse, comes down to the insurance that's actually available. I mean, that's what an attorney does, is they really look at how can I maximize the coverage to make sure I can maximize the damages and help that family or that individual move forward.
We look at the coverage. That's one of the things that an attorney will do, is to look at all the available sources of recovery. There is, from that standpoint, to maximize the recovery for our client. The damages are, unfortunately, they're set when the wreck happens. A lot of times, our client's damages, whether they're going to need surgery, not need surgery, I would always like to lessen my client's damages as much as I can. Because from the standpoint of, I don't want them to have as significant of physical injuries from that standpoint, but I want to maximize the recovery that I can obtain for them as well. And so, looking at the different insurance coverages that are available, the different sources of recovery, are something that an attorney can do and should be doing when they represent someone that's been injured in a car wreck. But also when when you own a motor vehicle, what insurance coverage is that you need to protect yourself and your family if you're in a wreck, whether you're the one at fault in the wreck or whether you're injured in the wreck and you were not at fault in the wreck. The coverage that you need to have on your vehicle to make sure you protect yourself and protect your family financially, and also from a medical bill payment standpoint as well.
That makes sense to me. Let's kind of from a definition standpoint, let's talk about the Kentucky state minimum required coverage.
From an automobile truck standpoint, Kentucky is a mandatory insurance state. And what that means is there are certain coverages. First off, if you're driving on any road in Kentucky, the law requires you to have insurance on your vehicle. Even if you're in a state that may not require insurance on your vehicle, once you cross state lines into Kentucky, you have to have insurance on your vehicle. And if you do not have insurance on your vehicle, you can get cited for that and pay a fine for not having that insurance on your vehicle. Kentucky, the type of insurance that is required, they don't require every type of automobile insurance coverage there is out there. What they do require is, first off, liability bodily injury coverage, liability property damage coverage, PIP coverage or no-fault coverage, which you've talked about before as well. And then uninsured motorist coverage is required, but that's one that you can opt out of. It's required to be written unless you sign a waiver of that. All of the other coverages are technically opt-in coverages, so you have to purchase those coverages. They're not required to be purchased. One of the issues, though, one of the problems is the limits that are required under Kentucky law. The mandatory insurance law came into being in 77 or 78, if I recall correctly. I know it was late 70s, I think 77, and the limits have not been changed since then. And, the minimum liability bodily injury limits are $25,000. The minimum liability property damage is $25,000. The minimum uninsured motorist coverage is $25,000. And the minimum PIP or no fault coverage is $10,000. Now we need to kind of define these terms for people. Liability bodily injury is kind of what it's somewhat self-explanatory. If you're the one at fault in causing the wreck, then your insurance will pay another person who's injured in that wreck up to $25,000 for their bodily injury. Up to your policy limits, which minimum are going to be $25,000 for their injuries. If their injuries reach the policy limits from that standpoint. A lot of times when you look at your policy, you may see it say 2550 or 5100. What that is the 25,000 is a per person. So no one person injured in the wreck can recover more than 25,000, but the insurance will pay no more than 50,000 total for any one wreck. So if you're in a wreck and you injure and you're at fault and you injure 4 other people, the max your insurance is going to pay if you got 2550 coverage is 50,000 for that wreck, no matter how bad the people are injured. And that's you'll see the same on uninsured coverage. A lot of times you'll see 2550 or something of that nature. And again, that's now uninsured coverage is coverage that protects you. It doesn't protect the people when you're at fault in causing the wreck, like liability coverage. Uninsured protects the person who's in the vehicle. If the other person that causes the wreck does not have insurance, then you can look to your own insurance company for your own bodily injuries up to whatever your uninsured motorist limits are.
And we've spoken about that extensively, especially in motorcycle accident episodes that we've done. Each spring, we try to do a kickoff episode for motorcyclists to talk to them about their coverages, because there are a few subtle differences, important differences, but there are a few differences between automobile coverage and motorcycle coverage when it comes to insurance, and we'll get into that when we talk about the PIP or the no fault insurance in particular. But the uninsured just simply means, hey, if that other driver is driving illegally, they don't have coverage, at least you have something to cover you for some amount of money. And
Exactly.
In that case, $25,000.
Yeah, to help pay for your lost wages, your impaired capacity to earn, your past medical expenses, your likely future medical expenses, and your pain and suffering. Those are the types of damages that you normally see in car wrecks that you can recover. Depending on the severity of the injuries, there can be additional damages besides those, but those are the primary ones that you see.
So far we've talked about the liability for bodily injury. We've talked about uninsured motorist coverage. Let's go talk about property damage. That's one of the 3 or 4 policies that you mentioned at the outset.
Correct. Liability property damage is, again, that is if you're at fault in causing the accident, then your insurance company would pay the person who's not at fault their property damage up to whatever your limits are. Minimum coverage is $25,000 from that standpoint. And, it's kind of like the bodily injury coverage and the PIP coverage. Back in 77, the limits were probably very adequate. Very few cars in 77, 78 were over $25,000. Now you got very few cars on the road that are less than $25,000. Excuse me. So if you are in a wreck and somebody's driving a vehicle that's in excess of $25,000 and you total that vehicle out, you don't have enough liability property damage to cover the loss of that individual in that situation. And that's where the policy limits aspect, which we'll go into a little more depth later, comes into play. But the liability property damage, and normally on the when you look at it on your deck sheet or declarations page, it will just have liability covered and then have, say, one bodily injury under that property damage from that standpoint. But that's what it is. And the property damage, if the property damage is only $10,000, and the bodily injury, you've got $25,000 of liability property damage, $25,000 of liability bodily injury, and the bodily injury claim is $35,000 case, and the property damage is only 10, they will not take that extra 15 that wasn't used in property damage to make up the difference in the bodily injury.
So they'll max out at 25,000 on that particular policy, even though they don't quite get there on the other side of it.
Exactly.
Yeah.
That's
It doesn't stack up.
It doesn't stack. It doesn't. You can't use one type of coverage that's not used up to supplement a coverage that is used up, basically, or exhausted from that standpoint.
We did talk about uninsured motorist coverage, so let's talk about what I always call it the twin brother there, which is underinsured. Let's just kind of get that covered real quick. I know that's a separate type of coverage here, but underinsured is where if you are let's just say the injured victim, it wasn't your fault, and the driver who caused the accident doesn't have enough insurance, you would come back on your underinsured. So you'd try to get as much as you could off the policy limit there, and then use your underinsured for the remaining balance or to cover your expenses, right?
Correct. Underinsured is similar to uninsured in that it's coverage that you have to protect yourself and your family and the other occupants of your vehicle, versus to protect somebody if you're the one at fault in causing the accident. So the underinsured is if you're in your vehicle and somebody crashes into you and the accident is their fault and their liability limits or bodily injury is $25,000 and your bodily injury damages are in excess of $25,000, then you can look to your own insurance company to pay in excess of that $25,000 liability insurance for your bodily injury up to whatever your damages are or to whatever your underinsured limits are, depending on whichever is the higher of the two.
And, we have talked about this type of coverage in numerous episodes of this podcast, and it always kind of, I think, makes people nervous when they think, wow, I'm actually filing on my own insurance for a collision that wasn't my fault. But in essence, you're paying your insurance company for that coverage.
Correct. You're paying your insurance for that coverage, number one. Number two, a conversation I have with clients is utilizing that coverage is not supposed to and should not ever affect your premiums, because that's you aren't the one at fault in causing that accident. So your premiums do not go up because you used uninsured motorist coverage, underinsured motorist coverage, or even PIP coverage. That should not raise your premiums.
And if I'm not mistaken, that's Kentucky law, right? That's a
Yes.
statute. That's not just policy. That's statute.
I think it's administrative regulation instead of a specific statute, but it is Kentucky law.
Yeah,
Yes.
yeah.
Yes.
So let's move on then to this no-fault insurance. And this, you had mentioned the minimum coverage is $10,000. Let's talk about what is no-fault insurance, because that always gets confused, which is also called PIP. We've used that term before. That's personal injury protection. And it's also known, you use a term that I don't hear that often. It's reparations benefits?
Basic reparations benefits. A lot of times, the actual statute calls it basic reparations benefits. A lot of people use the slang personal injury protection or PIP benefits or no-fault benefits. And basically what that coverage is, it's the same, it's three different terms for the exact same coverage. And what that is coverage that you purchase that will pay your medical bills, your lost wages, some other potential things there, but normally those are the two primary that it's used for when you're involved in a wreck. And the reason it's called no-fault coverage or referred to as no-fault coverage is when you're in a wreck, the vehicle you're in pays that. And they pay it regardless of who's at fault. And that kind of started out because if you had a wreck at a stoplight, both drivers claimed they had the green light. Well, what was occurring is neither insurance was paying medical bills for any of the injured parties because they were saying our insured was not the one at fault. He had the green light. The other insurance company saying our guy says he had the green light. So nobody was paying the medical bills as they were being incurred. And it was wait until the claim was litigated before anything got taken care of from that standpoint. So they put in the no fault, which basically says if you're in a wreck, the vehicle you're in, or if you're a pedestrian, the vehicle that actually makes contact with you is the one who pays for up to whatever those limits are. Minimum coverage is 10,000, but they pay the medical bills, lost wages up to those limits. And then when you figure out who is at fault, then the at fault insurance would turn around and reimburse the insurance it paid at that point in time.
And again, that up to 10,000 applies to every passenger, the driver and every passenger in that vehicle.
Yeah, every
They don't
person
split that; it's individually.
each has their own 10,000 of coverage from that standpoint. Yes, it's not split among everybody like the 50,000 in liability would be potentially on from that standpoint. So, and that's the reason it's referred to as no fault, or no fault coverage, but because who's at fault doesn't matter on getting that paid, but the at fault person's insurance ends up reimbursing at a later point in time from that standpoint. The one thing that I didn't mention that we need to mention about UIM coverage or underinsured motorist coverage is that that's not mandatory. You need to purchase that coverage, and frankly, that is coverage that you definitely need to make sure you are purchasing.
Well, and I think that this is where people go wrong, I think anyway, in my opinion, when it comes to insurance, because people do tend to buy on price. You know, how can I get my premium? How can I get my monthly or annual premium as low as possible, still be legal? But that can be a problem sometimes, especially when you're dealing with uninsured motorist coverage, underinsured motorist coverage, because it is so cheap to increase that for your protection.
True, you're correct. And then some people go in and just tell their agent, "I want full coverage."
Right, which doesn't really exist, right?
Well,
full coverage. Anyway.
Well, it doesn't fully cover you.
Yeah.
From that standpoint. And what that term normally means is that you have all the mandatory coverages, what's required. The liability bodily injury, the liability property damage, the PIP, the uninsured motorist, and then you have additional optional coverages, which are the uninsured motorist coverage, comprehensive coverage, and collision coverage. Comprehensive coverage is coverage that if you're driving down the road and a deer runs out in front of you, then it'll pay to repair your vehicle. And then collision is if you're at fault in causing the wreck, your insurance will pay to repair your vehicle. Now, if you have a loan on your car, you're paying a bank note for your vehicle. A lot of times they require you to have, quote, full coverage, unquote. And that just means they want you to have collision coverage. They want you to have comprehensive coverage. So if you're involved and you're the one at fault, or if a deer runs out in front of you, their collateral on that loan gets repaired back to where it's going to cover the value of their loan. That's what that is. Full coverage, though, does not talk about the policy limits that you have. So if you have full coverage, but the max limits you've got are $25,000, you very well could be woefully uninsured, and you are woefully uninsured, in my opinion, from that standpoint. And so you need to not only look at all the different types of coverage you have, but the amount in each of those types of coverage that you have. What are the policy limits from that standpoint? Because if you've got $25,000 of liability, $50,000 liability policy, and bodily injury liability, and you're at fault in causing the wreck, and the other person's damages are several hundreds of thousands of dollars, you caused significant injury from this wreck, that person may say, your limits are only $25,000. I want to look and see what assets you have that I can collect against. And, from that standpoint, and what you do see occur is with the underinsured coverage, when you go, if the liability limits are $25,000, your damages are $125,000, and you've got $100,000 of underinsured coverage, you go to your insurance coverage and say, I've got $100,000 additional damages over what their liability is. You need to pay me my limits of underinsured. And then if that insurance company advances the underinsured insurance advances the liability, then that underinsured, so you could have the force of State Farm or Allstate who have unlimited resources looking to come back against you for to reimburse them what they've had to pay out to their own insured underinsured. So making sure you have good liability coverage and making sure you've got the uninsured and underinsured that protects you and your family and the people in your car. If the other driver doesn't have good insurance, all of that is very important. And so that's the reason you need to look at, I need all of these coverages, but I also need to make sure, frankly, it's probably better off from my standpoint to have higher limits than it is to have some of the coverages that I've seen written at times out there. I've represented someone in the past when I looked at their insurance. They had coverage if they were driving in Mexico. I've seen some that had coverage if you were driving in Canada. And they were paying a separate premium for that. And it's just like, and I talked to the person, do you drive in Mexico very often? Never driven in Mexico. Never gone to Mexico. And they're paying a premium for that. They'd be a whole lot better off canceling out that premium or canceling out that coverage and using that same money to purchase higher limits on some of these other things. And when you look at it, at least when I've looked at it from a price standpoint, the cost of some of these other coverages compared to what you're getting is not that great. I mean, bumping your limits up is a lot of times doesn't increase the premium a significant amount. Now, significant to one person what's significant to one person may not be significant to another, and I understand that. And you've got to look at it from your own financial situation, but you need to have those conversations with your agent. You need to look at what coverage you have and then shop around. Because frankly, if you have a good insurance or if you have a good attorney representing you in your case, it doesn't matter who your insurance company is. If you've got a $100,000 case, you got a $100,000 case, and the fact that it's Allstate, State Farm, Nationwide on the other side doesn't change the value of your case. Now, some carriers make you litigate it a lot further than others do from that standpoint, but protecting yourself by having the good limits, that's the key factor from my standpoint.
And that's fantastic advice, because I think a lot of people kind of miss that. They think I've got coverage, yes, but it really is about the amount of coverage you have. It's the policy limits there. And
Yes.
that's eventually one day we'll do a video or we'll do a podcast where we kind of get your recommendation, looking back over the last 30 years where you've handled motor vehicle accidents. And again, these are cars and trucks and motorcycle collisions, all of these things. And you can say, you know what, in today's dollars, this is a good number, because you see a lot of hospital bills. You work with your clients all the time as you work through these cases where you know what certain types of injuries are going to, on average, probably yield in terms of expenses. Mm-hmm. So if you look at somebody that's got $25,000, you're like you're nowhere near covered.
Right.
At least not enough.
Now, in today's times, 25. If you've got full coverage but minimum limits, you're underinsured. From that standpoint. And if, I've had clients come in that were driving a vehicle that was probably worth $6,000-$7,000, and they had comprehensive and collision they were paying a huge amount for, and then they had very low limits on uninsured and didn't have any underinsured coverage. And, I'm sitting there thinking to myself, and I have the conversation with them as well, you need to reassess. You need to reassess this aspect of this, because these only cover when you're the one at fault or if a deer runs out in front of you. And I understand those can be expensive process, but Absolutely. Then if you're in a wreck and the person's only got $25,000 of coverage and they are judgment proof because they don't have any other assets, and your medical bills are totaling over $70,000, you're in a lot worse shape than if you lost a $7,000 vehicle from a deer crashing into a deer.
Yeah, it makes a lot of sense. friends, I told you at the outset that we're going to come around now and talk to homeowners specifically. We're going to talk a little bit about some insurance issues related to homeowners. And Jeff, let's use the last few minutes of our episode today to really kind of get into this. And really, you're talking about property and liability here. Let's kind of just open it up because I mean, obviously, you've been involved with these types of situations where somebody's come over and gotten injured at somebody. It could be a family member, it could be a neighbor, it could be just somebody else in the neighborhood.
Right.
Let's kind of break that open. And what would you advise people to do?
Well, a lot of times on your homeowner's policy, what you need to look at your coverage. And again, from my standpoint, I always focus on the liability side because of what I do. You need to look at what your liability limits are to make sure you have sufficient liability limits on that coverage. And then another type of coverage is medical pay coverage. And what that is, liability coverage is if somebody comes on your property and they're injured because of your negligence, then they can sue you and recover for their damages from that standpoint. Med pay coverage is usually if they are on your property and they get hurt, regardless of negligence, it will pay their medical bills up to that amount of money. Now, it doesn't pay you. If you're injured on your own property, it doesn't pay you.
Right.
It's somebody else on your property, not the homeowner or somebody that lives in the household. But to me, that is, and I may talk myself out of business to some extent here because I represent the injured party, but that is vital coverage to have because a lot of times I've talked to people who come in to see me, and the reason they come in to see me is they got hurt on somebody else's property, and the insurance wasn't paying their medical bills because they had no med pay coverage. And all they were wanting, and they may have a $70,000 case, they got $4,000 of medical bills that's not being paid. And so that's what's got them irritated. They don't realize because of their injuries, they can recover significantly more than that. So the lack of somebody paying their medical bills is what sent them to an attorney. And so from my standpoint, on my property, where my business is, where my homeowners, I make sure I have good med pay coverage to take care of those. If somebody gets hurt on my property, I want it to cover them because I want their bills paid because, frankly, if they talk to me and I think I was negligent, I'll tell them to go talk to an attorney. But that's what I have insurance for. But by the same token, most people aren't that way. And so if you have good med pay coverage, even if you are negligent, you may save yourself a claim from that standpoint. And so making sure you got good liability limits to cover if you are negligent, making sure you have med pay coverage to cover even if you're not negligent if somebody gets injured on your property, and then you should check your property coverage periodically as well. Obviously, you want to make sure your home is covered from the standpoint of storms come in and all of that. And that the value is still there for that.
That's the key point with all this inflation. I mean, a lot of times when we sign up for insurance, we just kind of renew it, and you're at levels that are from several years ago. And of course, buying the same 2x4 today is a lot more expensive. Hiring the same contractor today is a lot more expensive. So what was at one point adequate coverage is no longer adequate to help out cover your damage. So back on the property insurance, where storm damage and all this other stuff, you got to take a look at that stuff.
Yes, exactly, because it very well, my father has lived in his same home for, I think 69 is when they moved into the home. So he's lived in that home since 1969, and the value of the home in 1969 versus the value of the home now is vastly different. If he doesn't check his policy and update his coverage periodically, then if he had damage and he had the max value on it was what the value of the home was in 1975, that's going to be vastly different than what the value of the home is in 2023. And the other part of that is sometimes you have scheduled things on your coverage. Sometimes if you have a a expensive jewelry collection, you may have those and should have those listed separately as a separate item to make sure those are properly covered if they're damaged. If you've I've got a farm owner's policy, and part of I've got an outbuilding, but also my lawnmower is covered, and it specifies the lawnmower. And if I upgrade my mower, and I don't know that, okay, I've got it insured for a Toro that I bought 10 years ago or 15 years ago. Now I've replaced it with a different mower. Now my new mower doesn't have any coverage, and I'm paying for coverage on a mower I don't own anymore. And so
That's because you specifically listed it, correct?
yeah, because it's a specific item listed to cover that if something were to happen to it.
Even though you're still paying for it,
Yeah, exactly. So you're paying for coverage for an item you no longer have, and then the item that you replaced it with isn't covered.
right. It doesn't transfer automatically.
No, and so you need to make sure you update that and
That's
look
great
at that
advice.
to make
I've
sure.
never had somebody point that out before.
Yeah.
That's great advice.
Yeah, and that's just going to be on specifically itemized
yeah.
things. But because like if you've got something in your home that's very valuable, and you've got the contents of your home insured, but and your couch, your TV, all of those things. But then you've got something that's really valuable. If you've got a very valuable gun collection, then and you can be in a safe and everything else. But if there's a fire and it damages those, those coverage, it's going to be limited by whatever the interior coverage is. If you have it as a separately listed item, then that's going to be over and above the coverage for the couch, TV, and all the other stuff that's normally part of the home. So you're basically identifying that as separate and you're paying additional coverage. Usually it's not a significant amount unless you're talking. I mean, if you got $100,000, it's going your property, it's going to increase. But that way, it is you're making sure those are properly covered if you do have a storm or something that does damage those from that standpoint. And it happens at times that you get rid of something and you don't think about it, and then you look at your policy when it comes in. Oh, I forgot that I hadn't changed when I bought the lawnmower last year. I didn't change it on here. I need to call and let them know, get it updated, and that's just make sure you got yourself protected. So.
Well, and that's a lot of times when you watch a show on TV or you go to a conference or whatever. They always try to give you action items. And maybe that's an action item for today is to go ahead and pull out your policies, pull out your motor vehicle policies, so your car, your motorcycle, and just kind of look it over. Make sure you're set up right. Make sure you've got the proper coverage based on what we've talked about on this and another podcast, but also pull out that homeowner's policy. And really kind of look through that real quick and find out, hey, did I specifically list anything that maybe I don't have? Because that may be an opportunity to basically stop the coverage on the item you no longer have, but maybe increase the policy limits, the coverage amounts on other things that you do need to have.
Yes, exactly. And it's good to do that periodically. Frankly, every year when you get the bill in, check all of those coverages over on your motor vehicle, on your home, all of any type of insurance you have from that standpoint. Check it out periodically from that standpoint. One thing I do want to mention, just to make sure it's clear, because I mentioned mandatory coverages under the car insurance, PIP, no fault, basic reparations benefits, that is not mandatory for a motorcycle. You have to purchase that as optional coverage on a motorcycle. You should purchase that as optional insurance. Another type that I didn't mention earlier on there is something called added reparations benefits, which means instead of the state minimum of 10,000 PIP, you're purchasing greater coverage to cover medical bills and lost wages from that standpoint. And that's good to have as well. And if you have really good health insurance and you've got short-term disability, you may not need added reparations benefits in that situation, but if your insurance is not the best, or if you don't have any short-term disability insurance, then having some added reparations benefits to help cover lost wages when you're off work could be beneficial to people.
No, that makes a lot of sense. Jeff, I want to thank you for your time. I mean, you've been practicing for over 30 years now, and a lot of what you get into when it comes to representing your client is dealing with insurance issues, and they're complicated. I mean, just listening to this, I'm sure had a lot of people scratching their head. Now, wait a minute, what did he say? You know, that's why we put these episodes out, is to try to break things down and make it understandable. And if you have questions, pick up the phone and get a hold of Jeff. And Jeff, you've got offices right here in Murray, right in Calloway County, and also in Hopkinsville up in Christian County. But your primary office line here in Murray, what's that number if somebody wants to give you a call? Maybe they've got a question.
Yeah, the office number is 270-753-0053, or you can call the 800 number, which is 1-800-844-5108. And you call that number. If the office is open, somebody's going to pick, a real person's going to pick up and answer that phone unless they're busy on every other line from that standpoint. So you can call in and reach me that way. That's the best way to reach me from that standpoint. But you can also email me at jeff@jeffrobertslaw.com, or go to the website at www.jeffrobertslaw.com. And there's a contact form on there that you can reach out to me that way. But the best way is the phone or by my direct email. That's going to get to me quicker than any of the others.
And friends, I appreciate your time on this. So one of the things that I always try to do for you is to make sure in the show notes, if we've referenced other episodes, I'll put links to those other episodes in the show notes, which is all of those paragraphs that are right below the player that you're using to listen to this particular episode, to make it easy for you to go back and say, oh, okay, what was he talking about? Motorcycle? Here's a link to the most recent motorcycle tune-up, motorcycle prep episode that we did at the outset of this spring, and things like that, just to make life easy for you. But once again, Jeff, thanks for your time. And for the listeners out there, thanks for your time as well. We appreciate you. Take care. Bye-bye.
Thank you.
Thank you for listening to the Roberts Law Office Injury Podcast. Jeff will return in 2 weeks. Until then, he invites you to visit jeffrobertslaw.com and follow his firm on Facebook. At the Roberts Law Office, you'll find a history of small town service and big city results.